Welcome to today's Morning Report Charts Prices on Monday the 19th of December with me, Rich Pro-Market Analyst at Hand Tech Markets. We've got a fairly cautious market today, nothing too significant in terms of direction. You had earlier on a dollar correction that was sort of beginning to take hold. That actually has now started to unwind again. The strong move up that we saw up to Thursday just started to retrace on Friday and again early on morning today, but that seems to have just sort of been retraced a little bit because you've started to see Treasury yields bouncing again. 10-year slightly higher, the 2-year certainly off the lows of the day, and that has helped the dollar to unwind, and the dollar's actually now dragging euro dollar lower, cable lower. It's interesting that dollar yen is the big underperformer, so the yen is the big outperforming currency. That came after trade data for Japan that came in better than expected overnight. Oh, sorry, that's not going to help, so I'm going to just drag that. Okay, so what we have got to look forward to here today is not a great deal really in terms of economic data. We've had the German IFO business climate mildly better than expected, but to be honest, other than that, not too much to impact. You've got the flash PMI for the States, which is expected to be 52.0, although the Reuters haven't got any expectations here. The other sources tell me 55.2 is the just have 52.0. Anyway, 55.2. Sorry, is the expectation on that data this afternoon. So that would be marginally better than what we saw last month. But in terms of my chart of the day, we've got the Aussie dollar. Now, I spoke about the Kiwi dollar on Friday, looking to be breaking down. The Aussie has got a similar story. It's just on a longer term basis, broke that uptrend. It's actually now formed a top pattern below that 73 figure level. It was sort of moving towards that on Friday, closed marginally above that level, 73.04 on Friday, but again today, pressure to the downside. It's trading below it. If you see a close below that, it certainly is a negative outlook confirmation there. You sort of measure the height of the top, sort of around about 440 pips of downside, so you'd certainly say that 71.45 level from May would come under significant pressure, and then below that. But at the moment we're still seeing the momentum indicators which are deteriorating. There's downside potential on the RSI, 31 there, hit 27 back in November, so there is downside potential there. We've also got the MACD lines which have crossed lower again. The stochastics are falling. So all sort of points out towards selling into strength. Now I've got the quite a wide look at the hourly chart here, because you can see the 73.05 level that was hit in November is now the basis of resistance, and that has been in place since sort of Friday afternoon. So it is still a situation where rallies are being sold into. You see that back from this resistance at 73.60 that was throughout late November. Again, that formed a base of resistance on a consolidation before the next leg lower. So that seems to be a similar sort of situation to what we're seeing here. We've got the hourly RSI, which is unwinding back towards like the mid 40s. Sort of is an area where you'd think that the selling pressure might return. MACD lines again negatively configured. These are all sort of pointing towards using the rallies as a chance to sell, and certainly think that is the case. So between 73.05 and 73.60, I think that's a very decent sort of sell zone now on the Aussie dollar, and I think this is going to put continued pressure to the downside. It sort of plays into this whole dollar strength argument, and I think that a breakdown or a close below 73 figure is likely to be seen, and that would trigger the downside. So you'd be then looking out for arguably 72 figure, but more to the point, that key May low of 71.45 would then start to come in. Initial support Friday's low 72.60. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.